You may have heard of the efficient market hypothesis, but do you know really what it means? In this episode of 8 Train University, we're going to dive into the power of markets. Stay tuned. So welcome to this latest incarnation of 8 Train University. Today we're going to talk about the power of markets, or you may have heard of the efficient market hypothesis. And in this case, we really want to understand what in the hell are we talking about with efficient market hypothesis and this market stuff and what this top-down betting is driven by, because really it's a funny irony in that it's efficient market hypothesis that underlies the theory behind top-down betting. We also know quite clearly that the efficient market hypothesis is far from perfect. It's actually not even that great to explain sports betting markets. And yet, we're going to learn by the end of this that it's because of those inefficiencies that top-down betting works. So this is why we want to talk about these things tonight, and why we want to cover the power of markets, because there's a bunch of layers to all of this. First thing we want to understand is, why do markets work? Not talking about sports betting, but how do markets work, and why are markets known as the best way to understand what something is worth? And you can think of a lot of different kinds of markets. You have obviously the stock market, where you have the prices of securities and various derivatives and all of that. You can think about things like the housing market. What's a house worth? What somebody's willing to buy it for, right? How do you figure that out? They tell us what that number is. The reason markets work is that it's difficult to break those prices into their subcomponents. The fact is that there's infinite ways that you could conceivably break a price, a market clearing price in any market, into its subcomponents. But as people, what we're very good at doing, what we're extremely astute at doing, is factoring in a bunch of different things to come up with a price that feels about right. Now, I want to talk about, so you may be familiar with the fact that markets are the best way to determine what the likelihood of an event occurring is. And that could be something like a presidential election. It could be something like, will there be a stock market crash, or will there be a active hurricane season, or whatever. But one thing I like to use as an example of the effectiveness of markets is a third grade classroom. A third grade classroom that has a big ass jar of jelly beans. And that big ass jar of jelly beans has an unknown quantity of jelly beans in it. Now, we can get to the answer with the jelly beans and know exactly what those are by counting the jelly beans. And maybe the teacher already did that. But if the teacher goes to the students and says, how many jelly beans in the jar? Gives each student a guess. Some of those guesses are going to be insanely stupid, like 25 million. And another one's going to be like 11. And there's going to be some outliers that are just unbelievably bad estimates. So on an individual basis, we're actually pretty bad at knowing what the value is of something like that. But if you get a whole bunch of people, like 30 people, even not that many people, 30 people in a third grade classroom, guessing at the number of jelly beans, what you're going to end up with is basically a distribution curve, where the middle point of that distribution curve is going to be a fairly decent guess, a fairly decent estimate of the number of jelly beans in there. And that can be repeated over and over and over again in so many different contexts. That's the power of markets. By taking the collective wisdom of a group, you can get to a really good estimate on things that are very difficult to estimate otherwise. Jelly beans not that hard, right? Bunch of ways you can measure that. You can know what that is. But something like, how many hurricanes are we going to get this season? Talk to 100 meteorologists, and you're going to end up with a pretty reasonable estimate. Things like that are the kinds of things that markets are extremely good at, because they factor in things that an individual model, which exists in all of our brains, but an individual model could never actually factor in. So that is the idea behind the efficient market hypothesis, saying, hey, markets know more than you do. Markets will know more than any individual, because it's factoring in not just one human brain model, but all of them that are involved in that market. And so if you think about it, you realize, hey, what's better than one model? A whole bunch of people, a whole bunch of third graders. If one random ass third grader says, hey, I think there's 23,000 jelly beans in this jar, I don't know how big that jar is. That's all I got to work with. I'm going to do that. That third grader sounds like Bet Rivers to me. But the collection is very powerful. And that's the other thing to realize, is that all models are flawed. No matter how good your model is, no matter how much AI you plug into that, every single model to represent something else is flawed. And that's true throughout every model that has been developed in history forever, right? All models are flawed. Some are useful. Classic statement, very important to the context of our sports betting, right? So that in a nutshell, that's why the efficient market hypothesis is so powerful, is because the markets know more than you. You are one model in a collection. Your model, think about how good your one model would have to be. Your one way of thinking about that bet would have to be better than the entire market. Let's think about this and take that concept and bring it closer to sports betting. The efficient market hypothesis in sports betting is extremely powerful as a driver of the top-down betting approach, positive EV betting especially, right? But let's think about the opposite of that first. Let's think about bottom-up sports betting. What happens when you do bottom-up sports betting? You're analyzing stats. You're looking at player performance. You're doing exactly the same kind of stuff everybody else out there with any kind of model or approach or system or methodology or whatever is doing. You're reinventing the wheel every single time. And the only way you win, in reality, the only way you win is to beat the collective wisdom of everybody else. An individual needs to be better than everyone else to win consistently in a bottom-up capacity. Because the books, the collection of books especially, they have all the information. They're the market, right? So to win against the books, you need to be better than the collective wisdom of everybody else if you're doing bottom-up betting exclusively, right? In a book, the book only needs to be better than you. That's the beauty of being a sports book in a bottom-up world, is that they only have to be better than you to get your money. You have to be better than everyone to get theirs. But when we do top-down analysis, when we do market-driven analysis, that's when we're starting to take the wisdom of the market that the sports books use and a lot of times squander. We can take that entire market view by piecing together all this information, looking at things from different directions, thinking about things from different contexts, and using all that information, all that data that's available to us. We can use that and level the playing field. So it gives us a view of the market that a bottom-up bettor doesn't have, never has, because a top-down analysis predicates itself on a market view. That's why tools like TrainStation provide so much insight about what's happening throughout the entire market. It's not about how you feel about a bet. It's about what's the market telling you about this bet market, right? And we use that terminology throughout TrainStation because it's so crucial to the kinds of analysis that you do with TrainStation. All right. So that's fantastic, right? So we see there's power in this. We understand the power of the markets. We understand why that's good. I want to think a little bit about, though, there's some differences in sports betting versus something like the financial market. Let's talk about financial markets for a sec. Financial markets are extremely efficient. They're not perfect. Nothing's perfect, right? All that is true. But think about a stock market, right? Think about a stock market. What happens when Apple stock gets traded on the New York Stock Exchange or NASDAQ, whatever the hell they're on? When that happens, every other exchange in the world knows instantly. All of those markets, all of those trading environments are connected. And all that information is shared about that transaction all the time. You see volumes, you see where it was traded, you see the price it was traded at, you see the lot sizes, all of those things. You know so much about each transaction. You don't got that in sports betting, but we'll get to that in a sec. But you see, all those markets are connected. There's a lot of liquidity, which means what the market thinks the price is basically the price you pay with a very tiny sliver of margin in there. You know, far less than the dime lines you get on NFL football play, laying minus 110. So keep that in mind, that the markets are liquid. They make the costs of doing transactions are much lower than what we're going to see in sports betting, right? So those are like the other thing too, I should mention. The other thing too with financial markets is that how long does Apple stock exist? It's decades, right? It's like a long time. And people are spending their entire careers. Analysts are diving deep. You got quarterly, earnings calls. You got reports. You got, all of it, right? All the financial statements, all of that stuff. And you compare that to whether the second quarter, Philadelphia 76ers are going to cover against the Knicks, right? Like, that bet doesn't exist nearly as long as Apple stock, and the information associated with it is nowhere near as pervasive as that. So what we have there is a big difference in terms of the kinds and amounts and longevity of information that's tied to those efficient markets in the context of financial industry, right? So let's talk about sports betting more in particular. So the first thing that we just kind of talked about and why sports betting markets are not as efficient as financial markets is the first is the point around information scarcity, right? So the first is time, right? You don't have bets that last a long time. Now, granted, you have teams and players or whatever, and they exist, they're around, but that bet might last a week, a day, sometimes just hours. Heck, in a live betting environment, it's lasting seconds. Is the entire existence, the life cycle of that particular betting opportunity. So how long do you have to compile information about it? Not much compared to the years you can do research on a equity security in a stock market, right? Secondly, a lot of the information isn't publicly disclosed. A lot of the things that would be so helpful in knowing whether LeBron James is going to go over or under his point total for tonight, most of that is just known within the Lakers team or within the training staff or with LeBron himself. He's like, man, I shouldn't have had that burrito yesterday. No, so we don't know the most critical information a lot of the time. Somebody might, and they may be taking action on it, but we don't know who that is, right? So there's a lot less sharing of that information. In some cases, there's just not enough time to do it. In some cases, there's a lot of reasons why they don't want to share that information, right? So there's that piece leads to inefficiencies in the market. One of the biggest pieces is the disconnected markets in sports betting. Disconnected markets, whereas in the exchanges and the financial industry, everything is connected. Here in sports betting, we don't even have exchanges, right? You have individual sports book organization types of things where you have you have traditional sports books, then you have exchange sports books, but that has its own problems. But you don't have these generalized connected exchanges. Like if you're Goldman Sachs, you do a lot of work on the New York Stock Exchange. But if you are Circa, you're not betting a lot at Sport Trade. That's the thing. You're not managing your risk at another exchange. So it's a much different scenario. The exchanges cater to a consumer grade populace. At most, it's sharp bettors, but it is not institutional investors the way you would expect in the financial industry and the way that exists in the financial industry. Okay, so in these disconnected markets, you don't really have exchanges as you would in the financial industry. The sports books, they can't avoid getting their prices out there. So between organizations like ours and other data providers and scrapers and all of that stuff, the prices that are being offered in the market by the different sports books, like you see in A-Train Station, that's data that we are going to be able to get to. So that's kind of like markets where you can see what's the price in the New York Stock Exchange or whatever. But the thing is, we don't have all that other information that the stock exchanges have, like when people have done the transactions. Do we know what was the last time somebody bet this at FanDuel? I'd love to have that information. They don't give it to me. I ask, they're like, Train, go away. Right. So that doesn't equate at all. We don't get any kind of depth of information about what's happening in these markets. All we know is here's the prices this book's offering. And that's what we work with, right? So we don't know what the total order flow is. We don't know how many people are doing it, when they're doing it, how deep this market, how many people are transacting it. We don't have any of that, right? All we have sports books and prices and maybe a couple of these little weird exchanges that are out there. But the problem is, even at those exchanges, what do you see? So if you've used one of these exchanges, like a true exchange, like a Sport Trade, or a kind of pseudo peer-to-peer thing like a Cut or Bet Openly or something, what you see typically is you see not very liquid markets, very few true market makers. Some of them are set up to actually not even allow true market making. Some of them do allow market making, and it ends up being just like a handful of sharp sports bettors with big bankrolls trying to take advantage of anybody who comes along, right? That's not market making. Market making is saying, here's what we're going to offer, the pricing, whatever, come along, and we're going to have very, small spreads, and there's going to be a lot of liquidity in the market. No, you come into a place today, and it's going to be like, all right, you're about to get fleeced, sucker. So there's not really true market makers in the same sense. A couple of them are trying to do that, but there's very few incentives for a less educated or less advanced sports bettor to go to an exchange because they're just going to get taken advantage of. And that problem hasn't really been solved yet. So that's where the market making and that we're at best in our infancy. And in some ways, we're not even close to what would be the equivalent from a financial industry perspective. Okay. That's the easy systemic market stuff. Let's get into why the sports betting is even more messed up than that. Because what we have, and you'll hear me talking about this on the live stream, is that what we have are what we call systemic patterns, or you'll hear me talk about historically mispriced markets. And what that is the sports books, and we're talking specifically about traditional sports book, which is today where most of our insight about markets comes from. Those traditional sports books know the patterns that public bettors tend to have. They will overbet the favorites on the spreads. They will overbet the dogs on the money line because they want to bet a little to win a lot. So that's a huge square pattern. And they prefer seeing things happen to seeing things not happen. So you're going to see overs preferred to unders, right? So those are like the core of like know your opponent. And if it's a square better, those are going to be the tendencies, right? Those are just fact. The books know this. Right? The books know this, and they set their lines to take advantage of that. What's the problem with that? Well, it's because if we're interpreting the way the sports books set their prices as this is telling us what the truth should be, like the third graders guessing jelly beans are going to tell us more about truth of those jelly beans than sports books who are setting prices in markets that can be manipulated and have historical, clearly mispriced lines because of the tendencies of square bettors. And it's not even a big risk for a lot of those sports books because the sharp bettors can't even come in and change that market because they all get limited at these books. So they actually break down the competitive factors that would lead to good market pricing because they just say, you know what? Hey, you're a sharp bettor. You don't get to bet here anymore. Or you get to bet $5. It takes a lot of sharp bettors betting $5 to offset one whale who doesn't know what they're doing on the public side, right? So you see the books know their job isn't to tell us the truth. Their job is to make money, fleecing suckers because that's their business model, right? So when you have those kinds of limits on sharp players, they can basically neutralize the impact that sharp bettors would actually have in a true market environment. We don't have that here. The sports books just get to decide. They're not there to try to tell us what truth is. They're there to try to tell us whatever they want. They're just making money, right? The other thing, because why not make it worse? The other thing is that even the sharp books, so the Pinnacles and the Circas and the Bet Onlines out there, they use a technique to limit their risk early on as well, which is a concept known as circles. And it's basically early limits. So when they hang a line, when they offer their lines initially for a market, they're going to offer that at lower limits for everybody. So the good part is that they are going to be taking bets from everyone. The bad part is that they just limit everybody up front until they get to a stabilized price that then is subject to, news and changes and other things that are going to move that line. But the opportunity to get money in with a heavy advantage is fairly small, even at the sharp books, because they know how to get to a line. And their first line's not going to be terrible under most circumstances. It might be a little bit off. They might have a few grand at risk. But by the time you can get big money down, 5-figure money down, they are not going to be at too much risk. Their hold on either side of that, no vig line, that hold is going to be easily outside of the range of truth there. And so for them, they're going to make their money. It doesn't matter. And our opportunity to win money at a sharp book is going to be pretty small because they've kind of stepped into it through these circles and through these limits. Then you have the public books, the recreational books, who are just going to say, hey, you're a sharp better, you can't bet her at all. And so like we're kind of stuck there too, right? So you see those things, you see those dynamics, you're like, okay, well, this is unfortunate and this is a pain. The recreational books that limit individuals have the upper hand in the small context, but then lose some of that strength when new accounts come in and can take them advantage of it because they're not that sharp. So those recreational books, they're at risk all the time if new accounts can come in and take advantage of them even for a short period of time. So, you know, it's that cat and mouse. And that cat and mouse is kind of the constant pull of the sharp betting versus the sports books type of scenario. Because, I mean, at the core, the game itself is books hang lines. They offer odds on both sides of a bet opportunity, and under most circumstances, they offer both sides, but then they get the hold in the middle. We as sharp bettors get to decide which bets we want to take. That's the game. That's the game at its core. There's a bunch of noise around that, but it's the core game, right? So all this stuff we're talking about efficient markets, market efficiencies, all this stuff, it's got to be pretty depressing, right? You're going to be like, oh, shit. Are we screwed now? Like this, did Train just illustrate why we can't make money now? And that the power of markets is that no one can be a sharp sports bettor. No, not even close. We're not screwed at all with top-down betting. And this is why there's icing on this cake. There's a silver lining to this cloud, whatever you want to say. We are not screwed. And here's why. Inefficiencies, market inefficiencies. So we were talking, remember, efficient market hypothesis, but I'm now talking about the inefficiencies that I just outlined with information and all these things that the books do to keep the market from being good, well-functioning, liquid like the financial exchanges are. Inefficiencies lead to friction, okay? Friction leads to discrepancies, and discrepancies lead to opportunities. And what I mean by this is that when you actively fight market efficiency, which the books are actively doing, when you actively fight market efficiencies by creating these breakdowns in efficient markets, that's why we have these books with lines that are all over the place. And all we have to do is go bet them. They're free money in the aggregate. Like, yeah, you know, top-down betting, you win or lose, whatever, on an individual bet. But in aggregate, you're going to make money because these sports books are so short-sighted that they don't realize that they would be better off with efficient markets. Everybody would be better off with efficient markets that is working in that space, but they're so greedy and want to keep fleecing suckers that they're happy to deal with the discrepancies that those policies and approaches lead to, right? And therein is where if we have good software and good data and the ability to analyze things and the ability to go make bets quickly, or the ability to find places where we can get action or take action that exists at books that still take bets, these are the kinds of things that lead to opportunities for the sports bettor. Edges, sports betting edges come from inefficiencies. The sports books themselves are guaranteeing our long-term success because of all the short-sighted dumb shit things that they are doing constantly. We should be thanking them for those dumbass limits because they are guaranteeing the survival of the sharp sports bettor. And just like financial industry traders, we thrive in volatile times. The more the market is uncertain, the more we don't know, the more we should be, as traders, as sports bettors, out there in the middle of it, trying to find the truth. I do not agree that the beginning of baseball season's a bad time to bet. I think it's the greatest time to bet. You know why? Because there's more uncertainty in the market. Yeah, you can be happy with your 1% return when everybody knows all the stats and we have total understanding of how the ball is flying and the aerodynamics and all that stuff. We know what the totals are in the games, blah, 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 blah. Fine. Take your 1% with lower risk. You can do that. I'm going for 20% now, right? I am playing the game. I am analyzing the markets and I'm looking at every edge I can find because it's in those volatile times that we can thrive most. And the sports books, the donkey books, the square better books out there have guaranteed that for us because of the way they operate. So thank you, Bet Rivers of the world. You have helped the sharp sports bettors in ways you don't even understand because you are too busy focusing your energy on fleecing suckers and not enough at understanding economic theory like this, right? You are a financial institution. You are not a bookie with business cards. Anyway, that is why today we are at just the beginning when it comes to sharp sports betting. We are at this place where these inefficiencies, these very inefficiencies, the sports books are going to great lengths to perpetuate. They're what give us the opportunity and the ability to win with these blunt force instruments like positive EV and arbitrage. Like, how is it possible that we're just like, hey, go look at that number, let's bet that? How does that possibly work still? This is 2024. I can talk to my television set and it sometimes answers correctly. But the fact is that these things shouldn't work. These haven't worked in stock trading for like 40 years. This is insane that this stuff works today. And we have this opportunity because it still works. We have the opportunity to build up some bankroll right now before things get really tough. This would never work in more mature markets. We are at our infancy in sports betting in the US. Thank you, US, for creating 50 different markets, 50 different jurisdictions, 50 different sets of laws. Some don't allow anything right now. Fine. We got a bunch who do. And each one, they have rules. They can't share data. They've locked in these inefficiencies. It's beautiful, right? And so we can operate with the dumbest things we've ever seen with these arbitrage. These two numbers, if we add them together, they're positive. Let's get them. How does that work? We think we're masterminds? No, we barely do arithmetic in today's markets, and we can still make a ton of money. Wait until it gets interesting, because what's next is the evolution of this cat and mouse game. And that's where things are going to inevitably head. You have innovation in the market. You have new entrants coming in. You start to see some of these exchange-like things. You see the peer-to-peer stuff. You see a bunch of different innovatives happening. You see people like Fliff who are just like, fuck the rules. Let's do whatever we want. And they're going to try it, right? They're all going to do their different things, and we're going to see those opportunities, and that's where we're going to find edges. You know, with all cat and mouse, every time a new entrant comes in, they shake things up. Things change a little bit. We have to adjust to this. This is why I always talk about on the live streams. Every edge goes away over time. That's true of an advantage gambling, any context. And that is always going to be true. It's always the case. Every edge is ephemeral. It will go away. Okay? We must sharpen our tools to find the edges, to stay on top of these innovations by all of these, upstart organizations, existing books are trying new stuff. There's always change, and we need to find better and better ways to analyze the situation because it's only going to get more complex. We need to think about things like hybrid strategies, leveraging stats, doing some bottom-up betting, coming up with ways that we can do things that are more complicated than that number's bigger. Right? We need to find scarce information. We need to dive deep. We need to be able to say, things like injuries and lineups and all that stuff, that's easy. That's obvious. How do we find these correlations that no one else is seeing? That, as a sharp sports bettor, is what you want to be digging. You want to be a freaking detective, finding information nobody else has or knows or is thinking about. Those are the kinds of things that are going to lead to unique edges for you, which are going to last longer than other edges that everyone knows about, right? Live arbitrage, like all that stuff's obvious. Find ways to find edges that are going to be unique. Become a specialist. Go deeper in one area than anyone else has. Those are the kinds of things that are going to lead to enormous profits, just like they do for traders. That is how this works. Expanding the sophistication of how we evaluate these markets and how we evaluate these betting opportunities, it is going to serve us well. There is a lot of runway that we can see today that is going to be useful in doing that. And over time, it's going to blossom 100 times over. And so by using the right kinds of analysis, the right kinds of data, and most importantly, the right mindset, be curious, be thoughtful, be thinking differently all the time. Don't do what everybody else is doing. If you know everybody's doing it, you need to be on something else because that has gone away. It is dead. So when you see the Twitters blowing up over correlated DFIs, you'll be like, well, that shit's gone. Let's find something else, right? That's the kind of thing that you need to be doing. So it will only get faster and more complex as time goes on. Speed and strength It's really about, like we say at A-Train Station, next 5 minutes, next $5. It has to be fast and it has to be thorough. It has to be appropriately targeted to edges that are going to go away over time. So the key thing here in the power of markets, we've learned so much from watching what happened in the past in the financial markets, where those have evolved. Sports betting is not going to evolve exactly the same, but there's certainly lessons that we can take from the financial markets to know what's going to happen in the sports betting space. We know how the sports betting space is different and probably will be different from a long time. And we want to thank our friends over at the Recreational Books for keeping it that way longer than it should. Because we, as sharp sports bettors with the right tools and the right approach, we're going to be able to capitalize on these markets. Efficient, inefficient, or somewhere in between, we are going to be able to do that for a long time. It's going to be a hell of a fun ride, and we're going to be here every step of the way to make your journey as successful as possible. So with that, that is my talk on the power of markets. And with that, I'll entertain any questions from those of you who are still awake. Right. So the question is, will the sports betting markets ever even approach the efficiency of financial markets? My answer to that is it's impossible for them to. And the biggest reason is because the nature of sports bets, those are so short of time horizons, there's no opportunity to get all the data the way you would get in financial markets. So at its best, the spreads on these are going to be wider. The risks are going to be higher. I mean, at the end of the day, it's somebody's game. It gets decided by whether one person shoots a free throw in or not, or one kicker kicks a field goal. It's so random so much of the time that you don't have the ability to dive into all of these specifics, because there's always kind of a leap beyond that. Even with all the information in the universe, you still don't know how the game's going to play out. And that is one of the beauties of sports betting, is that there's always that uncertainty. So you'll never truly approach the kinds of efficiencies in financial markets, because the instruments involved only last in many cases for a couple days or a couple hours or a couple seconds. And so that's where you're just not going to see the same level of market efficiency ever, but you will see more efficiency over time. It's inevitable that we're going to see more efficiency over time, and it's going to move in the direction of financial markets. But there's a lot of reasons and a lot of people that are going to try to hold it back, especially because, people naturally avoid change as much as possible, especially when you're a sports book that's raking in dough. You're not that interested in changing things. Change is only a risk to you. So they're going to try to hold that back, but you're going to get innovation happening, and that's going to help us move towards more efficient markets. But I would say, too, the question also mentioned that, what if everybody just starts copying a Pinnacle or a Circa or whatever? They're not gods. They don't have all the information either. So if you get down to that one child guessing the jelly beans, that's not going to be efficient either. So what you need are a whole bunch of different points of view trying to do that. And that actually illustrates one of the current challenges that we have, is that there's only a handful of real originating market maker books. Most of these other books are just lazy. They're copying others. They're, just going with, some standard thing and then just kind of following the market and then just dealing with a few sharp bettors or whatever. It's like none of them are actually doing the work to take a real guess. They're just reacting to market information, which can lead us down weird paths. But if we have the ability as bettors, this is why doing some bottom-up analysis is actually really valuable, because you need to calibrate and do a sanity check on, is this just a really weirdly historically mispriced market that they have no intention of changing? Are all these one-sided FanDuel lines just always going to be off the true odds because they have enough money there to do it, and so they know they can just offer this one-sided line and cash in, even if a couple of the bets from time to time turn out to be positive EV for bettors like us? Those are the kinds of things that we need to get much more granular about, as well as things like book sharpness. We need to understand who are the ones who are really good at pricing some of these things. Right now, there's a lot of anecdotes and there's a lot of tribal knowledge, and there's a whole lot of misinformation that exists out there around who's good at setting which lines and blah, blah, blah. I think that can be quantified. I think that needs to be quantified. And I think that even when we quantify it, you're going to find there's a whole lot of inconsistency across all the different books. I don't think you're going to get to like, this book is the god of setting these lines. I don't think it's going to ever work like that. I think what we're going to see is that there's sometimes some of these are better some of the time in some ways. Some of these are better sometimes in some of the ways. It's going to be a lot messier than we'd like it to be. Welcome to how data really works in the real world. And that's why, as a person who's done this kind of data analytics work in other capacities for a very long time, seeing it in sports betting is like simple in some ways, and it's also incredibly complicated in others. It's such a beautiful game that we play as sports bettors, let alone the sports that surround it. The game we play as sports bettors is one of the most fascinating endeavors I've ever done in my career. And I've done things like help research scientists find new drugs. I've done things in public transit. I've done things in high tech, anything you can imagine. I feel like I've done work in that space. And for me, sports betting is such a fascinating mental exercise that can teach you so many of the core concepts around data-driven behaviors that, to me, it's just the best place in the world to be doing the kind of work that I've focused on for a long time. Right. So the question is that a lot of top-down betting today focuses on the odds for specific lines. Could we effectively flip that around and focus more on lines that are at different likelihoods of occurring based on some other analysis and gain advantage that way, even without as much depth of understanding on some of the pricing? And I would say, yeah, this is exactly where things are going, because there's been so much over the last few years. We've seen a huge increase in the number of bets being offered by sports books, especially recreational books. And because they do that, the way they do that is they generally have like their main lines, and then they have just a model that kind of propagates out the rest of those alternate lines. And some of them, I mean, we see evidence that some of them are setting main lines differently than alternate lines, and some will have 2 or 3 different sources of alternate lines at different odds within the same sports book. And so the hypothesis would be that if we could capitalize not just on the discrepancies of the odds on particular lines, but also looking at how likely are these lines really to be hit? So if you're looking at, median stats and saying, how often does this player meet this threshold or doesn't meet this threshold, and you could start to swing some of those numbers, could you get some strategies derived from that? And I think, yes, absolutely you can, because I do believe, and like I mentioned in the core talk, is that there's a lot of just blunt force instruments that sharp top-down bettors tend to use today, which are positive EV, looking at one number saying this odd is too, this price is too good on this particular market. Well, it's pretty simple, right? That's pretty straightforward. Arbitrage, let's play them both, and when we add them together, we make money. There's a lot of opportunity to look at percentages of that. And this is where I think your comment around the lines really starts to hold true, is how do we now start to look at combinations of bets where we could say this plus this has an 85% chance of happening, but is being paid like it has a 92% chance of happening. And let's go and play that, realizing that we may still lose, but we have such a high degree of likelihood of winning. We play enough of those. Now, all of a sudden, our variance goes from crazy high-low with all of these singleton plays to a much more balanced line and a much more incremental and consistent growth in our portfolios. And that is the kind of thing that's coming soon. Those are the things that we need to be pushing towards because of 2 things. One is that it will allow us to find opportunities that today are just unexploitable. And second, I think for people that are starting out, one of the things everybody should be thoughtful is like, how do you not show up as a sharp sports bettor? Like, the longer you can get action at any book, the better off you are. Now, granted, you don't want to be giving up a ton of edge to do that, but if you can come off looking like you're not as sharp as you are, having cover and doing that and having your accounts last longer, that's an area that a lot of people are going to be very interested in because it's core. I mean, outs, Spanky says outs and information, right? It's about how do we get the money down is more difficult in the grand scheme of things than whether or not it's a good play. And I think that's where more and more of our focus as sharp bettors is going to need to become. We're going to get the right analytical tools in to know where the good plays are. The real art is going to be how do we craft bets in a way that's indistinguishable from the way a square bettor would play it, and yet we can play it with an advantage knowing what we're doing. And a trader at a recreational book who's lazy and would rather be doing something other than working that day, they're likely to miss it. Those are the kinds of things that we want to be focusing on in the future. And I think, like, to your point, the lines themselves, I think that's going to be a key part of it. And I think too, like some of the specialization and some of just realizing that there's a piece to this that is evaluating whether a particular bet is good. And then there's another piece to this of how do you form a bet execution strategy that complements your bet identification strategy in a way that allows you to get the most money down when that is the hardest thing to do. And that, I think, is going to be a huge area of emphasis for sharp bettors into the future. We will wrap it up for that. So thank you all for sitting through my conversation around the power of markets, efficient market hypothesis, and all of the things that go into that. Hopefully you've learned a few things, and hopefully we'll see you on the next one. And so until then, this train is leaving the station. Until next time, save the units for the bros and do your betting like the pros. Thanks, everybody.